Okay, it's on the rise today, and it's not just interest rates, and it's costing you and I a lot of money. Hello everybody, my name is Barry Horvath and this is Moving Forward TV with your local market update.
Hello, and I am DeLynn Gaston. Thank you so much for joining us today. So today's show we are going to do something a little bit different.
Yes.
We're always giving you good advice and good tips, and we have people in, insurance people and home inspectors and things like everybody that can help you with your business. One of the other things, obviously, as you all know, Barry and I do the mortgage side of the business, and we never...
That's what we do?
Yeah, we never really,
I thought we just did shows
talk a lot
and gave
about
out
that.
information.
But we do, I know.
We just give education.
I know.
And in return, somehow we get business.
And I was going to say, and that's what we're about, is educating you on some of the changes and stuff. And as anybody who has been in this business any length of time at all, you understand that the world changed in the last several years. Since the mid-2000s and the complete real estate crash, when all you had to do was have a pulse and they threw money at you, to where we sit today.
I used to say you used to have to put fog on a mirror.
That's it. That's all you had to do.
Because we would have, remember, stated income?
Yeah.
Programs.
And stated assets.
Stated assets.
Didn't matter what your credit score was. They were just throwing money at people.
One day out of bankruptcy. You could buy an investment property one day out of bankruptcy at 100% and work at Walmart.
And you know what's sad? And you know what's sad?
And I'm not against Walmart, people who work at Walmart. Don't get me wrong. It's just not typically the highest paying job that would allow you to have 6 investment properties.
Right.
When the market, you got to have reserves.
And a 6-figure income.
Yeah, that was stated.
So, and one of the sad parts that even today, and the reason we're talking about this is because, believe it or not, some of the crazy stuff is still going on. So we thought after the real estate crash, all of those programs went away.
You're talking a lot, but you haven't told them what we're talking about.
I'm getting to that now.
Oh, sorry, I'll be quiet. Sorry.
A lot of those programs went away.
We're building up to it, folks. Stay with us. Stay with us.
However, the fraud didn't.
Oh, we're talking about fraud.
The fraud did not.
What a great idea. Let's talk about
People are still doing. So we wanted to kind of like give you an idea. And a lot of people say to us,
tell me to shut up.
See what I have to put up with? A lot of people say, as we're going through the mortgage process these days, well, how come you need that? And how come you need this? And they get irritated when we're asking for paperwork. Here's why.
Because fraud is on the rise.
It's still with us.
And
Sadly,
actually,
it's still out there.
I think in some cases they say it's up over 12% over a year end. It's higher now than it ever was, and probably, my opinion, the reason is the real estate market is hot again. Let's face it. Things are moving. There's when people try to jump in on things when there's an opportunity to make a profit.
Right.
And there's an opportunity to make a profit right now.
And
so the
doesn't make a difference if it's legal or not.
No, they're going to jump in and try to do it.
And sadly, some of the people out there are going to try and find the illegal ways of doing things to make a fast buck, or several bucks, and that's why. Unfortunately, that's why we're where we are. Interestingly enough, in doing some research on this, we found that Florida,
I know,
is number 3 in the country.
Only behind New York and New Jersey.
New York, New Jersey, and Florida. Top 3 mortgage fraud in the country right now. So, whereas, and Barry and I, we were surprised with this because we figured all the fraud went away.
No.
8 years ago when the market all crashed and Dodd-Frank, they changed the laws, the regulations, everything changed.
It's been 9 years. We're going on 10 years since the collapse of 2008.
Yeah.
It's going to be 2019, like in a couple weeks. That it's hard to believe how time has gone by.
I know.
And how long it took this this market to recover.
Exactly. We all thought, I can remember back in 2007 when the banks started closing one after another. I can remember thinking, oh, it's going to be like a couple months.
Yeah. No.
And I wasn't alone in thinking that.
No,
Everybody thought
it was
but
2 or 3 years.
We didn't know the magnitude of what was out there.
Right.
We had some of this stuff that we're going to share with you today. I had no idea this stuff was going on.
See,
And I'm in the business because I don't think like these people.
You don't think like a criminal because you're not a criminal.
Right.
Thank goodness for that.
I know. It is amazing. If they only use their brains for good, because these schemes are just unbelievable.
So let's talk about the rules that have been put in place, and then let's talk about supporting cases of why they're in place.
Right. Okay. So what should we start
I want
with?
to talk about AMCs because people always ask about appraisals right now. AMC stands for Appraisal Management Companies. And that rule
came to be?
That came to be in 2009. And, it used to be back in the old days, we were doing a lot of refis. Remember, rates were low. People would want to get cash out. They
Right.
were cashing in on all the equity. They'd go take that money, invest it in more properties or whatever they were going to do. You'd had a house that was maybe worth $200,000, but you needed to be at 220 or 240 or 250 to make the deal work for your borrower. So lenders would call the appraiser directly and say, hey, can you make this work at 240, 250, even though it was only worth 200? Let me see what I can do. I'll call you back. And they'd say, yeah, I'll make it work. And if they said no, the lender would move on to the next appraiser on their list and say,
Right.
hey, I got this deal. Do you want the job? And of course, the appraisers wanted the work, so they were pushed to make that happen at a higher value. And the impact of it now, if you remember back in 08, 09, appraisals were 250. That was a typical,
Right,
maybe 300. Now a typical appraisal is 450 to 550 because we put another layer in place with these AMCs. And the AMCs now have to make a profit because the AMC is just there to designate who gets the appraisal order. So now all we do is take Mr. Buyer's credit card, debit card info, put it in the system. Appraisers are on a list. They randomly get picked, and we're not, as a lender, allowed to speak to them directly and discuss this property on value.
Right.
I mean, there are situations where you're allowed to talk to the appraisal on other situations.
And there are situations where you're allowed to challenge the appraisal.
Yes,
if
but
you
you
don't
can't,
feel it came in
but you can't call them
correctly.
up and say, hey, it's coming in at 250. What do you think? So that, so anyway, you want to talk about the appraisal fraud section?
So appraisal fraud. So some of the stuff, and we wanted to share this with you. Sadly, a lot of this stuff happened right here in our backyard in Florida. So there was a person,
We
and
have a
this
big backyard.
we have a very big backyard. This is a person who
You just go with whatever I say.
right now, he's from Florida, from Tampa, and he is serving 26 years in prison.
All right.
This is
Whoa. So we have fraud and somebody's getting 26 years in prison.
26 years in prison. this
I want to
person.
know what he did.
Yes, he did a lot.
All
and
right.
what he has done to help the industry today is, being he is spending the next 26 years in prison, is he's actually sharing a lot of this information and what he did so
right,
that
you know
people
what?
can learn from it.
We're going to tell him what he did to get 26 years right after this quick message. We'll be back right after this.
Hi, I'm Jerry from Hot Locks Hair Salon. We are conveniently located at 13414 US Highway 19 in Hudson. I've been a local hairstylist in our community for the last 34 years, 7 of which I was an educator. Our passion is the artistry of hair, and Hot Locks is here to help you achieve your perfect image. You can call us at 727-514-9978.
Okay, we're back talking about the biggest thing on the rise, and it's not just interest rates.
And it's sad.
It is sad, actually. When I read some of these stories, it
I
makes,
know.
it makes you wonder, how does this happen, and
I got
why
to tell
did
you,
it happen?
you and I have been doing this a very long time. You know what bothers me the
You
most?
longer.
Yeah, all right, fine. What bothers me the most?
Well, that's another show, isn't it? Sorry.
What bothers me the most
Just makes you smarter.
is that, and people whether it's realtors or other mortgage professionals,
Right.
when they refer to this as the good old days.
Yeah. They weren't the
That
good old days.
bothers me.
They weren't the good old
It
days.
was horrible.
Now, we had people in the industry that should never have been.
Never have been.
There was no requirements. There was
And
no
this
licensing.
person is one of
Yeah.
them.
Yeah, and he admits it. And now
So these stories
we're
that
talking
we're
about
sharing,
him, and he's sharing his story now from a prison cell. He's got 26 years behind bars and told of all the fraudulent things he did to make a buck, which is really crazy when you think
and
about it.
he was right here local. His name is Matthew B. Cox, and I'm not saying anything
No,
that
no,
I
he-
shouldn't, because this is public record, and he
blogs
has shared
it.
this.
He
yeah,
blogs it. He
blogs
puts it
about
out
this.
there.
Okay, so let me read a couple of this is regarding appraisal fraud. So I personally have committed an extreme version of appraisal fraud. In Nashville, Tennessee, he did this. I had purchased several dilapidated single-family residences, roughly $65,000 each, in an area of town appraising in the range of 180 to 200,000. I had the yards landscaped and the exteriors vinyl sided, but I was unable to convince the local appraiser to overlook the interior deferred maintenance that was needed. She was downright ethical. I hated that appraiser. As a result, she presented me with what I thought was a worthless, subject to repairs appraisal, including a list of repairs that needed to be completed. It was an obstacle that I was determined to get around. So using the appraiser's own license and a slightly altered version of her email address, I managed to order the Uniform Residential Appraisal software by a la mode, and then I created a duplicate appraisal with some minor modifications. Subject to repairs became as is, and the list of repairs vanished. In the course of the next year, I used this software and her license to convince lenders like Chase, SunTrust, Bank of America, etc., to lend over $3.5 million on over 20 properties. Is that crazy?
So let me get this straight. This is a mortgage broker.
Yep.
The mortgage broker got the appraisal done, used his appraiser's appraisal, got software, and modified the appraisal
Yeah.
to make it exactly the way the lender, he thought it should look.
This is why HVCC exists.
Yeah.
This is why
But you know
appraisal
what?
management companies exist.
I have to tell you now, though, how to, even in today's world with AMCs, how do you avoid that? Because,
Anybody could do
anybody
that.
could do that.
I know.
You and I could take somebody's license, not
I
that we
know.
ever would, and just put it on an appraisal and pretend. But they, you know
That
what it
was
is, too?
extreme.
That was extreme, but I think
This
now,
one is a little bit less extreme.
I think now, though, obviously the appraisers have to be approved to be on an AMC list. They're really checking
Right.
them out. They're doing their due diligence.
Right.
And you can, as an appraiser, be kicked off an AMC list by not being diligent in
Right.
your appraisals or timely, et cetera.
This one I'll read quickly. This one was a similar, or the same person, obviously. This one was a little bit less extreme. So this was my core business, for-profit purchases. Realtors, rehabbers, and real estate investors were thrilled with my cashback scheme. In early 2002, my 90% loan-to-value borrower wanted to purchase a $150,000 multifamily. It would appraise at 205. On my instructions, the borrower, who was also a realtor, wrote the purchase price for $205,000, explaining to the seller, who was also a realtor, that the excess funds were needed for repairs. The appraiser cherry-picked the comps and came in with an appraisal at $205,000, and I did a loan for $184,500. At closing, I provided an invoice in the name of a non-existent construction company for roughly $50,000 in repairs that the lender believed had already been made. After the closing, the construction company's check was then reissued to the buyer, which reimbursed her for her $25,000 down payment plus a profit of another $24,000, essentially turning it into a 90% loan-to-value purchase into 130% loan-to-value cash out. And I closed nearly $1 million in loans for that particular realtor, and today she is still a real estate broker.
Wow.
Over the course of my career, I brokered in excess of $25 million in cash-back mortgage loans for doctors, lawyers, real estate investors, police officers, etc. I can tell you with all certainty that many of these loans have had a much higher foreclosure rate.
All right, so let's talk about the impact of that. So he fictitiously got a contractor giving money back on repairs and splitting the difference.
So these people were not putting a dime in. They were getting the money they were putting in. They got it all back.
Yeah,
so if you have no skin in the game,
right,
and the market turns and you're not making them as much money, maybe income-wise or whatever, so you let that property go.
Yeah, that's just crazy.
Because you're not losing anything.
All right, so let's talk about the impact of that. How did that cost us more money? We talked about the AMC stepping in, appraisals going up, roughly $200 each. What do you think that does to the industry in terms of interest rates? Because now Fannie Mae, Freddie Mac, they're eating these loans and foreclosing on them and getting less than they lent on. It has an impact on rates and their cost to do business.
Right.
Every bad loan they have on the books on these schemes cost you money, cost me money, cost everybody money.
Right. Because the banks now have all these properties that they have to foreclose on. Well, a bank used to have a foreclosure department consisted of what, 1-2 people? Yeah. And during this crazy time, they had to hire 500 people.
Hey, the good news is
employees,
now
overhead, health care.
Many of those departments have downsized because foreclosures have declined because we are being more diligent. But unfortunately, the fraudsters are still out there. And it's
still trying to find a way to defraud.
Happen. Yeah.
That's sad.
It is
that drives me crazy.
It is sad. Man.
So should we talk about another one?
Sure.
Employment?
Yeah, give me a taste of it.
Employment, income. All right, so here's income. This one is really interesting.
All right, DeLynn, wait a minute.
So we have to take a break?
Yeah, we do.
Okay.
But you know what? There's rules in place for employment and income now. But I can't wait to hear this story because
these stories are incredible.
Yeah, it's good stuff. We'll be back though right after this.
Hi, my name is Joe Stalteri. I'm one of the owners of Complete Care Systems. At Complete Care Systems, we do carpet cleaning, upholstery cleaning, tile and grout sealing, wood floor and laminate floor deep cleaning, as well as stripping and waxing of linoleum and vinyl floors, and a whole lot more. We also run daily deals and special, which you can find at CompleteCareSystems.com, or simply call Tricia up at 727-364-5158, and she'll answer all your questions and give you over the phone free estimates. Or she'll send me out to your home or office to give you an on-site free estimate. At Complete Care Systems, we don't cut corners, we clean them.
Hi, I'm Jerry from Hot Locks Hair Salon. We are conveniently located at 13414 US Highway 19 in Hudson. I've been a local hairstylist in our community for the last 34 years, 7 of which I was an educator. Our passion is the artistry of hair, and Hot Locks is here to help you achieve your perfect image. You can call us at 727-514-9978.
Talking more this week about the fraudsters.
Fraud.
A lot of fraud.
And they're still out there.
And the impact of the industry. And
And
what's
why we
happening.
have to go through, we in the mortgage, but a lot of you real estate professionals will say, well, what about this? And how come this is taking so long? And how come that's taking so long? Here's why. Here's why. Because of these things that were done and how we have to double and triple check things. So let me just run 2 quick stories by you again. Matthew Cox shared these with things that he did.
And Matthew Cox is the man, the broker.
Serving 26 years in prison right now for doing all of these things. And we
Yeah.
have pages of them that we don't have time to get to. But let me tell you about two of the income stories. Okay. So as far as income goes, a lot of times now we have to, it's called a 4506, and all of you real estate partners know we have to verify through the IRS what did they file, make sure it matches what they handed us for tax returns. And here's why. I recall a certain developer in Lutz who provided me with a set of fake 1040 tax returns. She had done a horrible job of altering these documents, and when I confronted her about the obvious forgeries, she admitted to having claimed less than $20,000 in income over the last 2 years, hardly enough to qualify her for the $450,000 loan that she was requesting. The developer insisted that she could afford the payments, although I had seen nothing to indicate this. She had very little documentable income, poor credit, and a spotty rental history. She did have a sizable down payment. I told myself that I was doing her a favor. But to be truly honest, the $12,000 broker fee was more than enough motivation for me to finish the job. She certainly hadn't offended any of my principles. I am not a CPA, so I paid a tax preparer $100 to create a convincing professional set of 1040 tax returns for her. Countrywide Home Loans must have been convinced because they lent her almost $500,000, and I received my sizable broker fee. The developer didn't make it more than a year before slipping into foreclosure. I had not done her any favors.
Wow. So
How sad is that?
So he got somebody to prepare fraudulent tax returns
Paid him $100.
that were never filed with the IRS. Again, why
Nope.
we have to do a 45
Why we do the 4506s.
to make sure what you tell the IRS is the same as the paperwork that
And
you're
why those
turning in.
things sometimes they're very particular
You know
about
what's so
those.
funny?
They reject them like that if one little thing is off on them.
Do you remember
for reasons like this?
back in the old days at closings, they only used to sign a 4506 at closing.
Right.
And it was only if they
It was only
defaulted.
10%. We only, as a lender, we only had to verify 10% of all the closings that we did in a year. We only had to verify
Right.
10% through the IRS. Now 100%, every file that gets taken
before
in
it even
is
can,
required
before it can get to the closing table.
through
that transcript
prior
has
to
to
underwriting.
match.
Has to be before it goes into underwriting. We have to have those transcripts
Wow.
back. Here's another one that he had done, again relating to income and employment. This is a little bit more for employment. So in early 2001, I brokered a loan for what I considered a strong borrower, and this happens, and I think that these are some of the places people are still trying to do crazy things. The person had 700 credit scores, a perfect rental history, good bank reserves, and good income. How many times have people said to you, oh, but he has a good credit score. Oh, but he has a good credit
know.
score. But it's not just credit score. So unfortunately, in the last 5 years, or in the last 2 years, he had 5 jobs. All of them were in separate lines of work, separate professions. Clearly, this was a case of unstable employment. For any ethical mortgage broker, this would have been a deal breaker. However, I wasn't confined to those restrictions. Instead, I created a fictitious employer by obtaining an employer tax ID number, hiring a live answering service, and listing the business number in the local
No
directory.
way.
I dropped a couple of W-2s and pay stubs into the mix, and voila. 2 weeks later, a merchant bank lent him $230,000. Over the next year, I obtained several more loans for Mr. Unstable Employment, a duplex and a triplex. In late 2002, I came across Mr. Unstable Employment sitting on a curb in downtown Tampa waiting for the bus. He had lost everything: his primary residence, his investment properties, and the bar that he had opened using the money from the second mortgage that I had brokered for him a year earlier. He said, I never should have bought that bar. We had a couple of bad months, and then the interest rate adjusted on my first mortgage, and it all went to hell. At that time, it never occurred to me I had contributed to his insolvency.
Wow.
Lives were ruined.
Yeah. All for a broker fee. But you know what? You get pushed. I mean, sometimes the borrower wants this.
I can remember.
And
I can remember telling
wanted the
people would come
car.
to me back in those crazy years. People would come to me to do something, and I would say, no. You know what? There were within walking distance of my office 5 other mortgage brokers.
it's crazy.
Walking distance.
Wow.
At that time, there was over 90,000 licensed mortgage brokers in the state of Florida.
Yeah.
That's
Wow.
crazy.
I have to tell you, DeLynn, this has to be one of the most depressing
Sorry.
shows we ever did.
Merry Christmas.
Yeah. But you know what's the reality of why things are the way they are
I
today?
I know.
In our industry, why do we really?
Why do we have to go through the hoops that we have
and
to go
it's
through? Why do we
because
have to?
It's because of these situations.
This is it. This
and
is
the
why.
willingness to commit fraud. I know personally.
And the fact that it's still going on.
Yes.
The fact that Florida's number 3 in the nation of mortgage fraud right now, which means people are still out there trying to defraud when it
That's
comes
crazy.
to mortgages.
All right.
This is why we go
All
through
right,
what
enough
we
of
go
this
through.
depressing stuff.
Sorry.
Let's talk about fun stuff. What's going on coming up?
We have
our lunch and learn.
Lunch and Learn
coming up for January.
January 8th.
And it's going to be on taxes.
Oh, fun. See,
Yeah.
there's fun stuff.
Actually, it's going to be on how to save you money on your taxes, how you as a real estate professional might want to better prepare your taxes.
Exactly.
And
Some of the
tax-
deductions that we're losing, some
and
of the
tax
deductions
law,
that we're gaining.
and the tax laws themselves. So
Right.
we have a very well-respected CPA in the community coming to do that presentation. So that should be good. What's the day of that? Is it January 9th?
January 8th.
January 8th, always the second Tuesday at Carrabba's in Port
Carrabba's
Richey.
in Port Richey.
And then, of
Come
course,
have lunch with us.
WPBA has an upcoming lightning bus
A
trip.
lightning bus trip.
That's going to be a lot of fun, by the way.
Valentine's Day.
February
Talk
14th.
about a great
Go online.
Valentine's
Actually,
Day
tickets
present.
are on sale now, and maybe a great early Christmas present
Right.
if you're looking for something to shop for.
That's true.
It's on WPBA.biz. Go online, get your tickets, find the lightning bus trip for
It's
February
always fun.
14th.
We have appetizers ahead of time.
Yep. It's
We
gonna-
have adult beverages.
Yes, we do. Yes,
Ahead
we
of
do.
time.
And that is an adult-only event. I might want to
Right.
add to that. So good stuff.
It
Yeah,
is.
that's fun stuff. Better than all this fraud stuff going on, But like our show, share it. Hey, however you saw this, maybe get it out there to your friends. Share it with your colleagues.
Right.
Because we're kind of
And
cool.
if you have any buyers or something like that, we appreciate sharing it with them as well. Buyers, sellers, they
Yeah.
can learn something from all of this stuff too.
Yeah, and wonder why we beat them up at,
I know.
on all the documents.
The more
You-
educated we make the whole world on this stuff, the smoother the
You
whole
are really good at
transaction will go.
educating people. You probably
I try.
you over-educate sometimes to people.
He
and
thinks I handhold too much.
Yeah, no,
I
but you're
don't
good. A
think
lot of
so.
people like that, though. A lot of people do love it. So, thanks for watching our show this week.
We are today and every day.
Moving forward,
We'll see you next week. Bye-bye.
have a great week.